Voltas Limited issued 2 lakhs in 10% debentures of rupees 100 each at par on 1/4/2013, repayable at the end of 5 years at a premium of 6%. A debenture redemption fund at 4% compound interest is created for the redemption of debentures. The investments were made multiples of rupees 10 in government bonds. The investments realized 10% below book value and the debentures were redeemed on 31st/3/2018. On 31st/3/2018, the company had a bank balance of rupees 90,000, that is before interest on investment. Note, rupees 1 per year at 4% compound interest at the end of 5th year would become rupees 5.4163. Prepare in the books of Voltas Limited. Number 1, 10% debenture account. Number 2, debenture redemption fund account. Number 3, debenture redemption fund investment account. Number 4, bank account. Number 5, debenture holders account. Solution. Here the value of debenture is 2 lakh and it is redeemed at premium of 6%. So 6% premium on 2 lakh comes to 12,000. So total 2 lakh 12,000. So now we have to see what is the annual appropriation from profit. It is given in the problem that rupees 1 per year at 4% compound interest at the end of 5 years would become rupees 5.4163. That means what you invest today, if you invest 1 rupee today, it will be 5.4163 after 5 years. That is the end of the 5th year. Now we need 2,12,000 after 5th year. That means at the end of 5th year we need 2,12,000 to redeem the debentures. So how much we have to invest every year? That means how much amount we have to keep aside from our profit and loss appropriation account, that we have to calculate. So it is 2,12,000 divided by 5.4163 equal to 39,141.11. If you want, you can take the approximation of that. 39,141 exactly you can take, or if you want to go for decimal, that is also okay. So here 5 accounts are asked. So in that first account is 10% debenture. So let us prepare 10% debenture account first. 10% debenture account, that is a ledger account. So it has debit and credit column. First we get the debenture. When we issue debenture, we get money. So bank account debtor to debenture account. Money comes in. So in 10% debenture account, by bank. Because when money comes, it is bank account debtor to debenture account. So it is on 1/4/2013 by bank account, that is the amount of debenture issued, that is 2 lakh. Then same year, end of the year, that is 31st/3/14, debit side 2 balance carry down 2 lakhs. Total of the year is 2 lakhs. So that will be the entry repeated every year till the last year. That means every year 2014, 15, 13, 14 we have written, then it is 14, 15, then after that 15, 16, all the years that is same. By balance carry down, 2 balance carry down. Every year the same. After that we'll come to the last year. Last year is 2018. That 1/4/2017 to 31st/3/2018 is the last year. So last year by balance brought down is same 2 lakhs. Then it will be closed. The debenture account will be closed by transferring the final balance to debenture holders account. So last year it is to debenture holders account 2 lakhs. We are going to pay debenture holders at the end of 5th year. So 5th year debenture account will be closed by transferring to debenture holders account. That will be the first account. Everywhere the total is 2 lakh. That is the nominal value or the face value of the debenture. Second account we are going to prepare is redemption fund account, debenture redemption fund account. That is also account of debit and credit. So first we are appropriation of profit from our profit and loss account. So first installment is appropriated. That is in the year 2013-14 by profit and loss appropriation account 39,141.11. That is the annual installment we have calculated. So that is the first year installment appropriated and which is going to be invested. So debit side it is 2 balance carry down, that is same amount, and the total of the account on that year is same. So next year it is by balance brought down. Next year, that is the second year. If you find difficult to write date, you can write first year, second year, third year. That is also okay. You need not write 13, 14. You can write first year, second year. So second year by balance brought down, same amount, 39,141.11. After that, first year's investment, what we invest in the first year, for that we are getting interest. So interest on debenture redemption fund. What is the installment we have invested? For that we are getting interest for 1 year. That is 39,141.11 into what is the interest rate given in the problem? It is 4%. Debenture redemption fund at 4% compound interest is created. So the interest is 4%. So 39,141.11 into 4%, that comes to 1,565.6. Then that year's installment, again second year's installment, what we are going to appropriate, that we have to write 39,141.11. So total of the credit side of fund account at the end of second year is 79,847.82. So same amount will be carried to the next year. So in the debit side it is 2 balance carried on 79,847.82. Let us come to third year. Third year, whatever balance we have in second year, that will be carried forward to the third year. That is by balance brought down 79,847.82. Then again we are calculating interest. Whatever amount we have invested on that interest. Interest on debenture redemption fund account, that is 79,847.82 into 4%. That comes to 3,194. After that again third year's installment by profit and loss appropriation account, once again the same amount of installment, that is 39,141.11. Total of the credit side is 1,22,182.93. That will be carried forward to next year by giving entry to balance carried on 1,22,182.93. Let us go to fourth year. Fourth year balance will be carried from third year, that is credit side by balance brought down previous year's balance, that is 1,22,182.93. Once again interest on the amount whatever already invested, that is by interest on debenture redemption fund account 1,22,182.93, that will be approximated. It made it as 183, 1,22,183 into 4%, that comes to 4,887.32. Then fourth year's installment. Fourth year installment is by profit and loss appropriation account 39,141.11. Total of credit side is 1,62,211.64. That amount will be carried forward to the fifth year. So, two balance carried on 1,66,211.64. That will be carried on to the fifth year. Fifth year is the last year. So, once again balance will be carried on to fifth year by balance brought down 1,66,211.64. After that interest of the amount invested. So, by interest on debenture redemption fund account, that is whatever amount invested, 1,66,220 into 4%. It is invested at multiples of 10. So, always the last digit should be 0. So, 1,66,220. 20 into 4%, that comes to 6,648.80. And last installment, fifth year's installment, that is by profit and loss appropriation account 39,141.11. So, all the 5 years over. Now, closing of the fifth year of fund account, we have to keep it pending because that will be closed only after closing of debenture redemption fund investment account. So that part we have to keep pending. So now let us go to the third account, that is debenture redemption fund investment account. That account, first we are depositing the amount in the bank. That is the first year's installment we are depositing. It is in the first year. To bank account, it is in the multiples of 10. So 39,141 is the amount we have. So the nearest 10 is 140. So 39,140 rupees we are investing in bank. So that amount will be carried for the second year. So credit side by balance carried on 39,140. So that amount will be carried to the second year. So to balance brought down 39,140. After that second year's installment and the interest on already the amount which we have invested. Both will be invested now. That is to bank account. That is Already interest what we have collected in the first year, that is second year, that is 1565.6 plus 39,141.1, that is the annual installment. So together it is 40,710, because once again we are going for multiples of 10. That means the last digit should be 0. So 40,710 we are investing in the end of second year. So total of that will be 79,850. This amount will be carried forward to the third year. So credit side by balance carry down 79,850. That will be carried forward to the third year. To balance brought down 79,850. Now third year, once again interest and installment will be deposited for investment. That is to bank account. What is the interest we calculated in the previous year? That is 3,194 plus once again installment 39,141.11 and multiples of 10 again. So 42,340. Together it will be 1,22,190. That amount will be carried forward to the fourth year, that is to balance brought down 1,22,190. Once again installment and interest deposit to bank account, that is the interest 4,887.32 plus the installment 39,141.11. Together once again multiples of 10, go for the previous 10 there, 44,030. Together the total is 1,66,220. That amount will be carried forward to the fifth year. So in the credit side by balance carry down 1,66,220. Now come to fifth year. Fifth year is the last year. So to balance brought down 1,66,220. Okay, fifth year we have to stop. Now fifth year closing entries. Now credit side closing entries. Now the installment is sold. And for what amount it is sold? Investment realized 10% below the book value. So it is realized 10% below the book value means it is realized at 90%. 100 minus 10 is equal to 90%. So 90% of the balance what we have, that is 1,66,220 into 90%. That is the amount we are realizing by selling that investment. So credit side by bank account 1,66,220 into 90%. That comes to 1,49,598. This is the amount we are collecting by investing, by selling the investment. So it is sold at a loss. So loss amount is equivalent to 16,622. That should be transferred to fund account. So by debenture redemption fund account, that is balancing figure 16,622. Together the total is 1,66,220. Now we have to go back and we have to close the debenture redemption fund account. So now in investment account, credit side we have written by debenture redemption fund account. That will be transferred to fund account to the opposite side. That is the debit side. Go to debenture redemption fund account in that opposite side. That means in investment account balancing figure where you have, that will be written in the opposite side of fund account. That is to side. See the last entry in the fifth year. To side. To debenture redemption fund investment account, same amount 16,622.00. Credit of investment will be transferred to debit of fund account. That will be written. After that, loss on issue. Loss on issue means we are, whatever debenture we are going to redeem, that is at premium. Whatever premium we are giving is loss to the company. So that loss we have to write. To loss on issue, that is premium or redemption which we are paying, that is 12,000. In the beginning we have calculated. That is 6% on 2 lakh, that is 12,000. So remaining amount is transferred to general reserve, that is to general reserve account 1,83,379.55. That is the balancing figure of fund account. So total of the fund account is 2,12,001.55. Here the debenture redemption fund account is closed. Debenture redemption fund investment account is already closed. After that we are opening debenture holders account. Debenture holders account, first we will write the transfer entry. Transfer entry from debenture account. See your debenture account. In debenture account the last year, fifth year, you have written to debenture holders account, 2 lakhs. So that 2 lakh debenture holder account, that will be transferred, that posting you have to do, that will be written in your debenture holders account in the opposite side. So it is by debenture account 2 lakh. And you are going to pay the debentures at premium. So by premium on redemption of debenture 12,000. So together 2,12,000 which you are going to pay to the debenture holders. So you would write in the debit side to bank account which you are going to pay them. 2,12,000. So total of the debenture holder account is 2,12,000. Remember, debenture holder account and bank account we open only for the last year, not for all 5 years. When we are going to pay, only in that year we open debenture holder account and bank account. So debenture holder account closed. Now the last account we are opening is bank account. In bank account already it is given what is the opening balance. Bank is an asset, so always the opening balance is debit. So bank balance they have given. Bank balance is 90,000 before interest on investment. So let us write that first. To balance brought down 90,000. It is given that it is not including before interest on investment. So before interest on investment means last year's investment is not added. So we have to add here to interest on debenture redemption fund investment account, that is 6,649, that we have to write. After that, to debenture redemption fund investment account. Go to investment account. There we have written in the last year buy side by bank, that is 90% realized, right? By bank account 1,49,598. That amount we have to write. That is the amount realized by selling the investment. So 1,49,598 rupees we got. So let us pay the debenture holders. Bank account. Just you go back and see the debenture holder account. In debenture holder account, two side we have written to bank account. So that will be written in the opposite side of the bank account by debenture holders account 2,12,000. This we are going to pay them. Now finally we are getting the balancing figure, that is by balance carried down balancing figure 34,247. So the bank account total is 2,46,247. Here all the 5 accounts over. That is first 3 accounts for all 5 years and last 2 accounts for only 1 year, that is the year of redemption.